Hello everyone, this is Siham from the Research and Development Department in Market Equity, and in this video I'm going to be talking about some of the important instruments and their price movement predictions for the day, which falls on a Thursday, 11th of November 2021. Let's begin with the gold, where in the previous videos we said that in the 4-hour time frame it is moving in an uptrend inside the overall sideways movement in the daily time frame, and we were waiting for it to target around level 1833, which resembles the upper boundary of the sideways movement in the daily time frame. And recently, we can see that the gold has broken upwards through it, and therefore has started an uptrend in the daily time frame, where it is currently being traded around level 1855, which resembles a horizontal resistance level for the gold in the daily time frame as well as the 4-hour time frame, and therefore, by breaking upwards through it, it will support the continuity of the uptrend in the 4-hour time frame as well as the continuity of the uptrend in the daily time frame, where it will continue to target around level 1900, then 1916 as primary targets in the overall uptrend. If we notice the RSI indicator in the 4-hour time frame, then we can see that by moving above level 70 inside the overbought area, it supports the probability of rebounding down off of around the current levels in order to correct and retest around level 1833, which is currently acting as a support level for the gold in the 4-hour time frame, before rebounding upwards off of it to continue with the overall uptrend. That was it for the gold. Let's move on to the US dollar versus the Japanese yen. In the previous videos we said that the pair is moving in a downtrend in the 4-hour time frame, and we can see that it is currently being traded around the downtrend line in the 4-hour time frame near around level 114.15, which resembles a horizontal resistance level for the pair in the 4-hour time frame, and therefore by rebounding down off of around the current levels, it will support the continuity of the downtrend as well as the targeting of around level 113.40 once again, then 112.70. However, one thing to note is that due to the strength of the previous upwards movement, it is somewhat unlikely for the pair to reach around level 112.70. Therefore, we can say that we are waiting for it to retest around level 113.40 upon rebounding down off of around the current levels in order to form a new higher low around it and continue to break upwards to level 114.30, which resembles the downtrend line in the 4-hour time frame, in order to build a new uptrend in the 4-hour time frame and continue with the overall uptrend in the daily time frame. If we notice the RSI indicator in the 4-hour time frame, then we can see that it has also broken upwards through the downtrend line that it has previously formed, where it is currently starting to rebound downwards off of around level 70 near the overbought area, which, by rebounding downwards off of it, will support the retesting of the downtrend line that the RSI indicator has formed before. If the indicator rebounds upwards off of the broken downtrend line, it will support the formation of the low around level 113.40. And another thing is that if the indicator rebounds upwards off of around level 50, it will then be supporting the formation of the uptrend in the 4-hour time frame. That was it for the US dollar versus the Japanese yen. Let's move on to the New Zealand dollar versus the US dollar. In the previous videos we said that the pair is moving in an uptrend in the daily time frame, and recently after it has started a downtrend in the 4-hour time frame, we can see that it is currently being traded around the broken upper boundary of the falling wedge in the daily time frame, which also represents level 50% Fibonacci of the previous upwards movement that started around level 0.6860 and ended around level 0.7220, and therefore by rebounding upwards off of around the current levels, it will support the continuity of the uptrend in the daily time frame, which in this case will extend to target around level 0.7170, then 0.7220. However, if the current downwards correctional movement in the daily time frame, which is the current downtrend in the 4-hour time frame, does extend, then we will be expecting it to continue to target around level 0.6980 before rebounding upwards off of it in order to continue with the uptrend in the daily time frame. Of course, the current downtrend in the 4-hour time frame and the short term is still ongoing. However, if we notice the RSI indicator in the 4-hour time frame, then we can see that by moving below level 30 inside the oversold area, it supports the probability of rebounding upwards off of around the current levels in order to continue with the overall uptrend in the daily time frame, or at least to correct and retest between levels 0.7070 and 0.7090 before continuing with the downtrend in the short term. That was it for the New Zealand dollar versus the US dollar. Market Equity wishes you successful trading. Thank you for watching and have a nice day.